Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Okay, happy Monday everybody. I hope you had a restful weekend and I wish you all a productive week ahead. Just a piece of housekeeping for the beginning of the episode. Later this week, I will be traveling to Kuala Lumpur, Malaysia, where I'll be meeting with clients and attending a conference. I would like to take the opportunity to meet with any viewers who are in and around Kuala Lumpur who would be interested in meeting for a subscriber meetup. If you are in and around Kuala Lumpur, or you can make it to Kuala Lumpur Central City this coming weekend, and you'd like to come to a meetup, my email is in the description below. Send me an email with a quick introduction to yourself and let me know whether you can make the Saturday evening or Sunday noon meetup. Let me know if you can make one or the other or both, and I will get back to you with the details once I have an idea of the numbers. I look forward to seeing some of you later this week in Kuala Lumpur. Now, with that said, let's begin with the episode and begin as we usually do with the economy. Over the weekend, we saw the publication of more new official economic numbers from Beijing, and yet again, the picture is quite bleak, with activity weakening across the board in August, but especially with home prices recording their steepest annual fall in 9 years. According to the data released by the National Bureau of Statistics on Saturday, retail sales, a key proxy for consumption, rose by a disappointing 2.1% year-on-year last month after 2.7% growth was observed in July. Industrial production rose 4.5%, down from 5.1% in July, while investment in buildings, equipment, and other fixed assets slowed 3.4% for the year through August, from 3.6% in the first 7 months. The only bright spot is exports, which rose 8.7% year-on-year in August, easily outpacing imports, which saw modest growth of just 0.5%. However, some would say that this is merely another sign of the imbalance of China's growth model, with subsidized manufacturing continued to exacerbate tensions with China's many trade partners. Indeed, just this week, India said it would hit imports of some Chinese steel products with tariffs of 30%. Indeed, money continues to be poured into factories and especially into priority industries such as electric vehicles, semiconductors and renewable energy gear. As we've discussed in previous videos, without more forceful stimulus directed toward boosting spending instead of expanding supply, the risk is that China will slip into a damaging period of falling prices with subdued growth, similar to Japan's decades-long stagnation, or the painful debt workouts that followed past real estate crises in Europe and the US. Consumer confidence sank in July while inflation remained pinned near zero. As we saw last week, China is in its 5th straight quarter of deflation by some measures. Yields on 10-year Chinese government bonds have plummeted to new lows, indicating investors are increasingly pessimistic on the economy's future. However, stimulating consumption is easier said than done, and it brings its own risks, which we explored in yesterday's video. Katrina Il, Director of Economic Research for Asia Pacific at Moody's Analytics in Sydney, observed on the new data from over the weekend, quote, "It seems like they are just floundering. I can't see anything that brings me optimism," end quote. The root of China's problems is a still festering property meltdown that is sapping government revenue, holding back investment, and putting weight on consumer confidence. Economists at Barclays estimate that if home prices nationwide fell in line with the 30% drop recorded in top cities since 2021, then China's real estate slump has cost the economy $18 trillion in vanished wealth. An incredible sum that adds up to around $60,000 for the average 3-person household in China. With that in mind, how did the property sector do based on the official Saturday data? Not good. Property investment, a figure that has sagged as uncertainties in the real estate market multiply, dropped by 10.2% year-on-year in the first 8 months of this year, identical to the fall recorded in the period from January through July. And more concerningly, home prices fell 5.7% year-on-year in August, the steepest decline in 9 years, and the 15th consecutive month of decline. Despite government efforts to stem the property crisis by lowering interest rates, relaxing home purchase restrictions, and pledging to buy unsold homes. Month on month, new home prices in 70 cities dropped 0.73% from July, following a 0.65% decline a month earlier. Values of used homes fell 0.95% compared with a 0.8% decline a month earlier. The prices in 66 Tier 2 and Tier 3 cities lost 1% and 0.9% respectively, widening from a 0.8% setback in July. Contracted sales recorded by China's top 100 developers fell 10% to 251.2 billion yuan in August from July, according to China Real Estate Information Corp, and 27% from a year earlier. The figures highlight Beijing's struggle to contain the property downturn at a time when deflationary pressures are adding to the economic gloom. The prolonged slump in property values has deterred home buyers as they wait for further price declines. Chen Wenjing, research director at China Index Holdings, expressed on Sunday, quote, "There is substantial pressure for new home prices to keep falling. In the busy coming autumn season, only a few big cities are likely to see home buying activities pick up." End quote. Raymond Chung, head of China property research at CGS International Securities Hong Kong, similarly expressed today, quote, "Home sales have stayed weaker than expected. If the issue is not solved, property prices and transaction volume contraction will continue." End quote. Adding, quote, "Many mainland developers still lack the cash to finish their projects, as the overall economy remains weak, which has discouraged people from buying new homes. Only when the developers solve their liquidity problem and the economy recovers can we see improvements in home prices." End quote. US-based Bloomberg reports that shares of Chinese developers have slid further into a bear market, with a Bloomberg intelligence gauge dropping more than 40% from a mid-May high. Quote, "China is poised to cut interest rates on more than $5 trillion of outstanding mortgages as early as this month," people familiar with the matter told Bloomberg this week, as the government accelerates a move to spur consumption. The move, however, will have minimal direct impact on the property market, even if it helps household income and consumption. End quote. Next up, we have a Taiwan update as well as US-China relations, but just quickly, if you're getting some value from China Update and you'd like to see the channel grow, don't forget to hit the like button. Sharing and subscribing is also a big help. Hit the bell icon and you'll be on top of the most up-to-date China analysis as it's released. Patreon and Buy Me a Coffee links are also in the description below for those who want to help keep the channel financially sustainable. Over the weekend, China's military criticized Germany for the transit of two of her Navy ships through the Taiwan Strait. Chinese military spokesman Li Si expressed in a statement, quote, "The German side's behavior increases security risks and sends the wrong signal. Troops in the theater are on high alert at all times and will resolutely counter any threats and provocations." End quote. The transit occurred on Friday, with Germany's defense minister explaining in a press conference with the Lithuanian defense minister, quote, "International waters are international waters. It's the shortest route and, given the weather conditions, the safest. So we're going through." End quote. Asked about the move, German Chancellor Olaf Scholz said that, quote, "There is not much to say. It's an international waterway." End quote. The Taiwan Strait is a major trade route. Several countries' military ships use the waterway, including the US. US warships sail through the strait around once every 2 months, and some US allies like Canada and Britain have also made occasional transits. However, according to German media, this is the first time in 2 decades that Germany's navy has done so. This suggests that the move was calculated and could signal yet again that NATO allies in Europe are increasingly shifting focus to the Asia-Pacific, seeing the war in Ukraine linked to security in East Asia through the relationship between Moscow and Beijing. China in recent years has stepped up military activities around the island, including staging war games. However, Taiwan's defense ministry in a recent report said it believes China, quote, "is not yet fully possessed of the formal combat capabilities for a comprehensive invasion of Taiwan." End quote. Interestingly, this report drew criticism from China's defense ministry over the weekend. On Saturday, a military spokesperson expressed, quote, "The Democratic Progressive Party authorities' claims are absurd and ridiculous. The complete reunification of the motherland is a historical inevitability," end quote. And finally for today, as they resumed work last week, House lawmakers in the US emphasized a strong stance against China, advancing over 24 measures targeting Beijing's technological, political, and economic influence. This push, called China Week, included 28 bills, many of which received bipartisan support. While all bills still need Senate approval before potentially becoming law, it's uncertain how many will advance due to the limited legislative calendar. Let's take a few moments to briefly examine some of the more noteworthy measures. 1. The Biosecure Act, which passed early, would ban federal contracts with certain Chinese biotech firms aiming to protect American health data. Affected companies like BGI Group and Uxi App Tech argue that the legislation could harm competition and innovation. 2. A bill targeting Hong Kong's trade offices in the US was overwhelmingly approved. If these offices are deemed insufficiently autonomous from Beijing, they could face closure. The Hong Kong government and China's foreign ministry have criticized this move. 3. Another bill would restrict drones from Chinese company DJI from operating on US communications infrastructure, citing security concerns. DJI has called the measure xenophobic and warned of its negative impact on various US stakeholders. 4. The House passed a measure to revive a controversial Trump-era Justice Department program aimed at countering intellectual property theft, despite opposition from Asian American groups who argue it unfairly targets Chinese scientists. We note that this comes after several high-profile arrests of accused Chinese spies have made headlines in recent months, including the former aide to the New York governor, who has been accused by the Justice Department of accepting millions of dollars in bribes from Beijing. 5. A bill to restrict agricultural land sales to nationals from certain countries, including China, sparked comments of discrimination but was justified by proponents as necessary for better oversight. 6. Lawmakers narrowly passed a measure tightening the criteria for Chinese components in vehicles to qualify for US tax credits, which critics say could slow the adoption of electric vehicles, but proponents argue is necessary to protect American industries from subsidized competitors, as well as national security concerns. 7. A bill requiring congressional notification before renewing or extending scientific agreements with China was passed, reflecting concerns about China's access to sensitive US technologies. Okay, that is today's episode of China Update. A nice start to the week. I hope you enjoyed it. Thank you very much for watching, and I will see you all tomorrow.